All right, Liz, excited to have you here today. You're going to go over new construction with us, huh?
Yeah, I'm going to answer whatever questions you have about new construction.
All right, I guess
Yes.
I got to ask all the questions. All right, this is
Yeah.
how it works. All right, so you've got some experience. You've sold many new construction houses, and I guess really, I think what people want to hear is what are the differences, right? We could talk about buying or selling every house, but we're talking about new construction today. So what are some of the big differences with new construction homes?
So the biggest difference that I find in new construction homes that I think is the biggest benefit is, of course, the fact that if you buy a new construction home, the first thing is new construction in Massachusetts comes with a 1-year builder's warranty.
Okay, that's cool. So that's Massachusetts. Every state's probably a little different. They probably have a little
Yes.
bit different rules, but warranties are important. So not just from the builder, but you also have all new stuff in the house, right?
Yeah, absolutely. I mean, everything in the house is brand spanking new. So for the first 20 years, you don't have anything. You have nothing that you have to do,
Okay.
assuming that you have a great builder.
And I would imagine new appliances, new hot water heater, new maybe it's tankless, whatever. Those are probably each coming with their own warranties too.
Yep, all new stuff comes with its own manufacturer's warranty.
Okay, all right.
Yeah.
So that's a huge benefit. So, all right. So we have warranties then on every piece of mechanical in the house, really, at that point, right?
Yeah, absolutely. At that point, and whatever doesn't have the manufacturer's warranty, again, you have that 1-year builder's warranty. So you just call up your builder if anything goes wrong, and they're going to show up and fix it for you.
All right, that's kind of cool. So,
Yeah.
I mean, everything from some soup to nuts, I guess, is what we're talking about.
Yeah.
All right, so we have obviously like warranties. That's a huge deal. That's a great peace of mind for budgeting, right?
Yeah, absolutely.
Yeah, so-
if you're buying an older home, you have to factor into the first, I don't know, 5-10 years. Like, what are you going to have to do in that home over that amount of time? Does the roof need to be replaced? Does this need to be replaced? In new construction, you just move in and enjoy the house. That's all
Okay.
you do.
All right, so about that house that you're about to enjoy, I like the segue a little bit. You didn't set that up, I don't think, right? But about that house, you're also able to customize a lot of stuff, right?
Yeah, so it depends on the builder and it depends on where they are in their construction process. Some builders will allow you to customize from the foundation up. Sometimes the builders have already their foundations and everything all set in place, and then you can just customize the final things like the fixtures, the paint color,
Okay.
the rug color, whatever.
All right, so this actually brings up a good point when actually talking back into the financing world. So there's two types of, so people understand, there's two types of construction out there, new construction out there. There's going to be builder financed, and there's going to be buyer financed new construction. And generally on builder financed is where a builder is literally either building a spec home or building a home for you, but the buyer's not actually getting financing for that. The builder's doing all that.
Yeah.
So when you talk about somebody being in the middle of a build or a builder being middle of the build, and depends on where they are as far as customization, what you're talking about is specifically builder
Financed.
Yeah,
Yep.
exactly. So if they haven't put in fixtures or a countertop or whatever, you can come in and you can then customize those things to your liking.
Yeah, exactly. You can usually within a budget. I mean, even though they're already in the process and they already have the floor plan and everything all set, it's within a certain budget. And if you exceed that budget,
Yeah.
obviously it's going to be a bit of an upcharge. But yeah, you can ultimately customize the finishes.
Okay, and so as a buyer's agent, let's put you in that role here for a second, because I know you've been on both sides of the transaction. But
Yep.
as a buyer's agent for new construction, that's something you're negotiating in with the contract.
Yep, absolutely. During the process of purchasing the home, again, depending on where the builder is in their process, you negotiate that in at the time of the purchase.
Okay, awesome.
Yes.
Yeah. So I mean, that is one of the things that I see as one of the the huge advantages to new construction is because, you buy a house that's already done, that's already built, and it's maybe 20, 30, 50, 60, 100 years old. You got to come in here and you got to make it your own,
Yep,
right? You
absolutely.
actually have somebody from the start making it your own, which is a huge benefit. And yeah, maybe it seems like it's a little more expensive on paper, but in reality, if
Yep.
you're coming in and retrofitting an old house to make it new and make it look what you like, that's going to cost you a lot of money too. So on top
Absolutely.
of that purchase price.
Yeah, absolutely.
Okay. All right. I like it. Let's talk about here for a second, like a buyer financed situation where a buyer is actually, well, I'll talk about that a little bit for everybody, where a buyer is actually getting a construction loan, where they're actually getting the loan to build the property, and then they're bringing in their own builder. As a realtor, you're helping them negotiate that process too, right? On the land and with the builder.
Yeah, absolutely. Yep. And I have a lot of people who always ask me questions about the process of what does that look like when you're purchasing land and then you're having a builder come in and do it. People are always asking me, what does that process look like from the financing piece of things?
Okay.
So,
Yeah. Okay. So, all right. So that's a good question. So from the financing piece of things, let's talk about those two types again. Back up for a second. Talk about the two types of financing, which is new construction, which is builder finance and borrower finance.
Yep.
The easiest one is the builder financed, as you know. That's literally a builder's building a home, and when you close on that home, you're getting the finished product. So in fact, it's just like any other mortgage out there. Same down payment requirements as a regular mortgage, same qualification requirements as a regular mortgage. It's a regular mortgage because you're buying a finished product. It's like you're buying a built house. There's no difference whatsoever to it. The only things you have to concern yourself about is our rate locks generally. So we have just come through a time of rising interest rates. So we had a lot of people going under contract for new construction, maybe people that I wasn't working with, right? A year later, they are now calling me going, oh, shoot, like, hey, what can you get me for a rate on this property? And my lender never locked me in a year ago when I started construction on this house, and I'm trying to close next month, and the rate just went up 2%. And they were, obviously, that's a huge difference in payment, right? So from a financing perspective, when you're buying that end product, if it's going to take 6 months or 9 months or 12 months to build, you have to talk about we talk about extended locks. So literally locking in a rate today at today's rates, as opposed to waiting and hoping rates don't go up in a year from now.
So how does somebody get that extended lock?
Yeah, so yeah, great question. It's literally just an option that we have for new construction properties. And what we have to know, what's really important is how long is that builder going to take? Because you're going to get better rates for 3 months, 6 months, 9 months, or 12 months, depending on how long of a lock you need. So you have to consider how long it's going to take. So that's important in finding a reputable builder. So you have several reputable builders that you work with, and usually when they give you a timeline, they're hitting that timeline. Yes,
they are.
Right?
Yeah,
and
absolutely.
That's super important from our perspective. We work with both. We've got situations where people don't hit those time frames.
Absolutely.
I've gotten calls from people again who started building 2 years ago, and that's not cool.
That's
right?
a long time.
Yeah, that's not cool. And 2 years ago, the interest rates literally were like a third of what they are right now. So their payment just maybe doubled. And
so you can do a rate lock for up to 2 years?
I can do it up to 12 months. And that's why it's important to have that reputable builder. Because if a builder says it's going to take me 10 months to build, well, we want it built in that 10 months because you want to be protected on your interest rate.
Yeah, absolutely. Yeah. So the great thing about the builders that I work with is they take 3 to 6 months.
Okay, well I guess that's pretty.
It's a lot better.
Yeah, that's pretty awesome.
Better option.
Yeah. So all right, so back to the two types of financing: builder financed and owner financed.
I actually have a question.
Okay.
So regarding new construction loans,
yes.
when you're trying to figure out what everything looks like for the potential buyer, whether it's buyer financed or builder financed. How do you determine the taxes on a brand new construction property?
Yeah, so what we would normally do is a town has what's called a mill rate. So that mill rate is just X amount of dollars per $1,000 of value. Depending on your state, sometimes they tax you on 100% of value, as you know. Sometimes they tax you on, say, 70% of the value. It just depends on where you're at. But we are literally just taking that mill rate times what the purchase price is, because we're considering that the value. And for underwriting purposes, that's the number we're using. Mm-hmm. Okay. Now, you're not going to get your tax bill until after you close. So we're not going to have the exact figure, so we're going to estimate that. We're going to approve you based upon that number. When the actual tax bill comes, you give it to us, and if the actual is less than your estimated, we'll just adjust your payments accordingly. right?
Awesome.
Or if it's more than estimated, obviously we'd have to adjust it in the other direction. But yeah, that's it. We're just taking that mill rate, right? So, all right. So again, financing, builder financing versus borrower financing. So there's a term in the industry that we use. It's called construction to perm. All right, construction loan to permanent loan. There's two types of construction loans. There's a construction only loan, at which point you build the house, then you have to go get your final loan afterwards. Mm-hmm. So you're actually taking out two loans and going through two processes and two approvals and two closings. With the construction to perm loan, which is something that we offer, it's one closing, one approval process, all that. So you're going to buy that land. What is Mr. Colby coming to say hi to you again? All right, I like it. So it's that one approval process, one underwriting process, one closing, and you're getting your rate locked right up front on that house. And basically you're getting a construction to perm loan, which is a construction loan that converts automatically into a permanent loan once the construction's complete. Okay.
So what happens, so you're getting your rate lock in, what happens if once the construction is complete, the rates go down?
Well, you could always refinance at that point. So the rate...
Once the construction is complete?
Yeah, once the construction is complete, you could also refinance. Just like any other home that you're buying, if you bought a home today and 12 months from now, that rate goes down, you could, in fact, at that point, refinance. There are some float down options that are given at the time of the end of construction as well. So there could be a potential for, without a refinance, a float down at the end. But generally speaking, you're getting that interest rate. I can't talk. Generally speaking, you're going to get the interest rate that was given to you up front. That's your rate. And like everybody else who has a rate that was locked in a year ago and a loan that they closed a year ago, because remember, you're closing here. You're closing way up front. So you're a year from now, if rates are different, that's generally what you're doing. You are refinancing at that point, like anybody.
Okay, so let me ask you this:
Yes.
when I built my house, what we did buyer financing.
Yes.
And the process of that was our builder would get disbursements. So depending on whatever was done, he would get disbursements. And during the process of construction, we paid on the interest, I believe, at that time. Is that how buyer financing works?
Yeah, absolutely. That's actually a good point. So yes, you are during the construction phase, because it's a construction a permanent loan. Mm-hmm. It's one loan that just converts automatically. During that construction phase, there are disbursement points. So maybe the foundation goes in, there's a disbursement made, the framing and all of the roofing and siding, and it gets weatherproofed outside. All that's done, maybe another disbursement then goes to the builder, right? Well, on that foundation, maybe that was $50,000 dispersed. Well, now that $50,000 is out, you're paying interest on that $50,000, okay?
And that's the only payment,
Yeah,
just the payment of the interest until it's closed.
Exactly. Now, I'm talking in super generalized terms. That's generally how it's going to work for most construction loans. However, there are some where there aren't interest payments even during the construction phase. They're built into the actual construction loan. So the interest that would be due during that time are actually built into the construction loan, believe it or not. So you're not actually even making the payments at that time. There are others where you took out $500 for that construction to permanent loan, you start making payments on the entire $500 immediately. So you have to talk to your lender to determine what your terms are going to be, because there are different setups out there. The one that you had set up that you're explaining is very, very common though. That's common, that you're paying on only what's been dispersed.
Yeah, it was very convenient.
Yeah,
made it nice and easy.
Absolutely.
Yeah.
And so when you're doing that type of financing, generally speaking, like when the builder's financing, a lot of the times, I think in your experience, a lot of times they've already got a house maybe 50, 60, 70% done by the time the buyer comes along, right?
Yeah.
So they're choosing their finishes at that point?
Yeah.
Okay.
I mean, essentially, you're either purchasing a pre-existing house that the builder had already selected all the finishes, or again, depending on where he is in the process, you're getting the finishes done. Builder financing is, I would say, by far the probably better option based on my experience. I mean, not that it was too difficult to have a buyer's loan, but to have it all done and all set and just go purchase and move in is pretty convenient.
Yeah, so you get the benefit of that finished new construction house without the hassle of managing contractors and making sure people are showing up and having that construction of perm loan. You're just getting one loan at the end, and that's it.
You're just buying a house.
Yeah. Okay. Yeah. But there's differences in how you're negotiating too as a realtor when you're buying a house. When you're buying a house from the contractor versus buying a piece of land to construct a property on it and financing it yourself, right?
Yeah, absolutely. I mean, when you're negotiating the purchase of a house and potentially adding in there, your own finishes versus just a piece of land and then trying to find a builder who can build on it and all of the process of making sure that land is appropriate for construction, it's a whole different ballgame when you're doing it like that.
Okay, and then also you're kind of negotiating with that builder then too when it's builder financed for finishes as well, but literally up front. And a lot of times, talk to me about the what do they call it? They do an allotment basically for like a budget for plumbing and lighting, and how does that work?
Yeah, essentially within the contract, the builder will give you a budget for each thing. So, the kitchen is you have a budget for XYZ amount for the kitchen, a budget for XYZ for the bathroom. You don't have to, I mean, obviously you want to stay within that. If you exceed it, it's just essentially an upcharge and it'll just be added in, but that's typically how it works.
Okay, so when you're actually choosing the house and you're building the house up front, you're not like, all right, I want this light fixture here, I want this bathroom fixture here, you're not necessarily choosing 100% of that stuff up front. You're saying, yes, there's going to be a light, and yes, there's going to be a fixture here. Obviously, I need water to come out of this sink. But as it's going on, they're allowing you to then basically select those items along the way?
Yes, along the way, in steps. Absolutely,
okay. All right, so if they said, hey, lighting fixtures, I'm going to give you $10,000 to spend, and again, that's part of what you're negotiating on their behalf.
Initially,
for that, right?
Yeah.
Okay, so if they say, all right, it's $10,000, and they spend, the lights that they in fact choose end up being $13,000.
Yep.
How does that? They just pay the builder the difference.
Yep, it's just tacked on. Yeah.
Okay.
Absolutely,
all right. So either tacked on to the price. Oh, hey there. Either tacked on to the price or just paid in cash at the time of closing.
Yeah, absolutely.
All right.
And the same goes for a builder financed. So, for example, the builder that I work with, he has things already constructed. So if you catch him, because he does a lot of subdivisions.
Yeah.
So, for example, if you catch one that's not complete, 100% complete, now you have the option of selecting your own items. So in his particular instance, he already knows what he's paid for or what he has allotted for these certain things.
Yeah.
He'll do the same thing where, for example, typically he'll do carpeting in all the bedrooms. Not everybody likes carpeting in all the bedrooms. So if you decide that you want hardwood floors in the bedrooms, that'll be an upcharge. He'll determine the amount the difference that would be, and then that'll just be built into the final loan.
Okay. And then when you're going to see one of these houses too, I would assume basements are a big deal too. Like sometimes I walk into new construction and it's just framed out down there. Maybe it's insulated and ready to finish, but it's not finished. So you as a buyer's agent in that case would be able to negotiate then as well finished basements and things
absolutely.
like that.
Finished basements are always going to be insulated. They're required to be insulated.
Okay.
But yeah, if you're walking into a house and you want something additional in the basement, they're 100% willing to do that. But again, for an upcharge.
All right. So they're swinging a hammer, an extra swing on that hammer is going to cost you a little bit extra money. Okay. All right. Talk to me about energy efficiency. I mean, obviously you're getting all new appliances. They're going to be the most up-to-date energy efficient appliances. What other steps are builders taking really for energy efficiency?
So some of the new things that are coming down the pipe now are all new construction is going to be required to have the conduits for solar panels now.
Okay,
and they're also going to be required to have the electrical in the garage for electric vehicles. So that's a new thing that's coming down the pipe. I mean, just new construction in and of itself is has specific requirements and they're required to be energy efficient. So when you're buying a new construction, again, that's another savings versus buying an older home. This is already an energy efficient home versus an older home. Now you're going to have to put in that time, effort, and energy into getting it energy efficient.
Okay. All right. So in different states obviously will have different rules as it comes to what's going to be required.
Yeah.
But right now in Massachusetts, that's interesting to know. They're requiring plugs for cars now in new homes and the conduit for solar.
Conduits for solar panels.
Okay.
Yep.
All right.
Yeah.
That's an interesting one. I like that. And I mean, this is just for somebody who doesn't build houses, right? This is a layperson's view of things. Just walking into an open house of a new construction home in the middle of the winter versus walking into a 100-year-old house. There's not cold zones. There's not like it's warm. It's inviting. It's nice.
Yeah.
So that insulation, I mean, they're doing probably 2x6 construction or whatever, and just that extra insulation really helps keep those utility bills down.
Yep. Yeah.
Okay.
Absolutely.
Okay. As a person who owned an old house, they can be not even drafty. The one I owned was windy, is what I call it. So,
Nice.
Cue the laugh from Liz. All right, give us a good hearty laugh. That was a funny joke.
I don't think it's so funny.
Oh, screw you. All right, that's Alyssa back there behind the camera. That's not very funny. Anyway, all right. Talk to us just about like builder reputation. How do we know like who's good, who's not?
Builder's reputation is incredibly important. So there are different ways in which you can figure out, whether or not you have a great builder. One great way is just to drive through some of their other work that they've done. I've actually had people come in through open houses, write down some of the other things that my builders have done, and drive through and take a look at their work. I mean, if you drive through somebody's subdivision that they did 10 years ago and the siding's coming off, you might want to look into a different builder.
Okay. All right. So with builder financed, we're just oftentimes they've done a lot of other stuff.
Yeah, absolutely.
And then with the buyer finance stuff, they're oftentimes going and selecting a builder. I would assume same thing.
Yeah, I mean, absolutely same thing. You can just ask for references, ask around, ask people who have used that builder before. And I mean, if you really want to be so bold, you could probably take a walk through somebody's house if they're willing to share. A lot of people are very proud of what they have, so they'll allow you to walk through and see what the builder's done. Yeah,
that's actually a good point. You find that with people who construct their own houses. They're proud of what they've built, right?
Yeah, absolutely.
They selected the finishes.
Yeah.
They want to show you. So the builder may have some names of people that they'd allow you to even go and take a look.
Yep, absolutely.
And then when you build it, you become one of those names of people and expect people to walk through your house too,
yeah,
I guess.
You're
right?
added to the list, so you better make sure your decor is on par.
All right, perfect. Yeah.
So what are the qualifications on your end for somebody who is interested in having not a builder loan, but their own loan?
Okay, so their own loan. So builder loan, like we talked about before, is just like getting any other loan that's out there. But as far as that construction to perm, there's actually some really flexible programs out there. We actually have stuff for FHA, VA, USDA, and conventional loans. VA, USDA, you can actually do 100% financing, believe it or not. FHA with
Nice.
3.5% down on a new construction, which is incredible. That's with us specifically, but in generally speaking, most construction loans are somewhere between 10 and 20% down. I would say that a lot of construction business is done by local banks because people in their head think, oh, those are the people who do new construction loans, right? And so when you go to a local bank, you're probably talking about 10 minimum down percentage and 10 to 20%. And when I say down payment, I actually mean the adjusted price. Say the land is $200 and you're building for $500, that's a $700,000 purchase. So now we're talking 10 to 20% down on that. There are, again, products that we have that would allow you to do up to 100% of financing for certain programs. Veterans being specifically one that would do 100% financing, or even, like I said, as little as 3.5% down FHA or 3% down with conventional are all really good options for your construction to perm loans.
So essentially then when you're looking for a new construction loan, you're basically qualifying for that final amount. So for that 700,000, if that's the house, if that's going to be the end loan amount.
Yeah, exactly. Yeah, you're doing that total amount because that's what your payment's going to be based off of at the end of the day. So we're qualifying you based upon that payment.
Okay, good to know.
Yeah. So a lot of there are a lot of options. There's more options than used to be in the past. In the past, it was usually a large down payment, and that was people's number one barrier to entry when it came to new construction. Now there's some options. And then as far as building the house, these new construction loans are not made for the handyman, right? It's not made for, hey, I'm going to do my own plumbing and sheetrock and electrical, and I can do this stuff, and I'm going to figure it out and frame it myself and all. It's made for, we want contractors. We need contractors to do it, and we need them to stick to dates too, because you were getting that construction a permanent loan. It needs to be completed by the date that it was specified that it is to be completed. Now, we'll usually add a little buffer in there because we know sometimes supply chain issues, things like that.
Right.
But in general, we need that thing completed in the time frame that it was meant to be up front.
So in the event that there's a delay, what happens on the loan side of things?
Yeah, so on the loan side of things, when there's a delay, there can be extensions given. They cost money though, and oftentimes into the contract, we're building into that contract that if there's a delay and there's cost to it, we're making the builder pay for it. Mm-hmm. So that delay money is coming out of their pocket as opposed to you as the buyer. And that's something that's super important for somebody when they're negotiating and they're talking through with their builder, that something like that's built in because you want that builder to be incentivized to complete on time.
Yeah, that's a great point, actually.
Yeah, if there's a delay and you're paying for it as the buyer, what do they care? It's like, all right, you're not happy with them. You're not the first client who's been unhappy with their builder, all right? There's a lot of them out there. But if it's coming out of their pocket and every month it's costing them $5-6 out of their own pocket, you better believe they're going to get motivated to get their butt over there and complete that house.
Yeah, absolutely. Yep.
Yeah. I think some buyers look at new construction. Right now, construction costs are high, and I think they look at new construction as more expensive. Are they really seeing the whole picture?
No, I don't think that you are seeing the whole picture. I know you walk in and you might get sticker shock, but ultimately, if you're looking at what you're paying up front with something that you're not going to have to do any work to for 20 years versus going into something that, like you said before, is maybe 20, 30, 100 years old, over your time of ownership, how much money in that first 20 years are you going to have to put into that? At the end of the day, is it going to equal the same amount as it would if you were to purchase a new construction home and be able to just move in and sort of just enjoy it for a while?
Yeah, so savings there on maintenance, but then also probably on utilities too.
I would say savings on utilities, savings on maintenance, savings on just your time. You know, you're not running around fixing things, worrying about this, repairing that, doing this. You're just money. Yeah, time is money. You're just enjoying your house.
Okay. All right. Yeah. I like it. All right, Liz. Well, I appreciate you coming here talking to us about this. Thank you so much. If you've got any questions, you can look me up, Brad the Mortgage Guy. Liz, how do we find you?
You can find me in all social media. You can find me and the team at TheElizabethSaloisTeam.
All right, perfect. Well, reach out. Anybody's got questions, we are happy to help. It's a lot of nuance to new construction.
There is.
Having the right guidance is really important.
Absolutely. Yep.
All right. Peace out.